Good morning, everyone. Thank you for joining us today at Resell C Business Services. As always, my name is Evan Arce, and it has been a very long time since I posted on this channel, so for that I do apologize. The last 8 months I was assisting small businesses impacted by the pandemic over 6 different states with my colleague. With that being said, the purpose of this video, kind of on the fly, is to kind of on the fly. You can tell by the camera quality that it's on the fly right now. It's early morning over here in Orlando, Florida. The purpose of this video is to discuss a couple significant market considerations when it comes to the re-emerging U.S. economy. I know that California just recently reopened for business at full capacity, whereas on the eastern side, there are states that have been operating for much longer. So with that, we'll be discussing at wavelength topic level a few different factors that are influential at this time. One of them is cryptocurrency, the other one is the U.S. housing market, and the last is what seems to be going around and circulating a lot is the notion of hyperinflation. So cryptocurrency I'm going to keep short, and just to disclose this up front, I'm actually not an advocate for cryptocurrency in any way, shape, or form. I do not have any holdings in cryptocurrency, and I, on a personal level, do look at it with a certain level of disdain, but that does not mean that people have not made a lot of money off of it in the last couple months or years. My thought process is when you look at cryptocurrency, you have to look at what you utilize to buy cryptocurrency, which is typically a U.S. Treasury backed currency. And then when you exit cryptocurrency, what are you receiving in exchange? You are receiving a U.S. Treasury backed currency. So obviously that case would be different if you were operating in foreign soil or anything along those lines, but the reality is when you look at what truly governs cryptocurrency, at least for the near future, will continue to be conventional currencies. Not to mention, I think we can all mutually agree that the U.S. government's aim, intention, and interest is to develop its own cryptocurrencies, possibly in the near future, replacing the nationally recognized legal tender and bullion system that we currently have. Aside from that, we can look at the U.S. housing crisis, and I do say that specifically against the grain. If you still speak to a lot of mainstream realtors, or if you look at most real estate advertisements, they will tell you that the market's booming, everything's hot, now is the time to buy. Well, anybody who has looked at history knows that that's not necessarily the case. Plus, if you look at in specific materials, the cost of materials, it has skyrocketed over the last 18 months, and one of the most circulated and well-known costs has been lumber prices at above 260% increase until recently, where the lumber prices are now receding and plummeting at a rapid rate. That is not the only thing that's depleting. If you look at the Mortgage Bankers Association and Mortgage Application Index, and you review some of their publications, you'll find that the mortgage applications this month and last month have dropped significantly, and this is because people are no longer buying into the notion that buying a house right now is a solid investment when the prices are surging to offset the low interest rates, which now leads us to hyperinflation. Now, hyperinflation, if you look at why people are saying that, it's because the U.S. has printed more than 1/3 of the U.S. money supply over the last year and some change. And the U.S. Consumer Price Index is not rising in correlation. So that's throwing a lot of people off, and a lot of people can't make good sense on why that may be the case. But if you're wondering in the shortest and simplest way possible how to make money during a time period of hyperinflation, the answer is simple. There are ways to short sell currencies, and in specific, if you buy a hard asset prior to hyperinflation, then in a few years you can sell that hard asset for the escalated price under hyperinflation. If you utilize this in cases where you may take on debt, then in which case the lender will receive their money back, which is obviously at the end of the day what everybody wants, but you're going to be making potentially 2 to 3 times more by purchasing hard assets before hyperinflation. Anyways, guys, that's all the time I'm going to try to take up today. For those people who have utilized cryptocurrency, I'm not discouraging them from it. Actually, a big debate right now is whether cryptocurrency will be able to stand hyperinflation at one end of the spectrum, because conventional currencies are utilized to purchase cryptocurrency. With the increase in inflation, one could say the increase in cryptocurrency values would occur as well, which would be awesome for cryptocurrency investors. But at the opposite end of the spectrum, you can also look at how inflation affects the stock markets and things of that nature. And you would know, traditionally speaking, that it is very difficult to invest into stocks during a time where inflation is a major concern. But if you are one of the many lucky people who have made a lot of money off of cryptocurrency, you can contact us at 360-731-0729 to start transferring your holdings from the intangible to the tangible. Everybody have a great day.